To me, this is a bear flag on Bitcoin. Bear flag on Bitcoin starting to inch lower. Now notice how bank stocks are up today and Bitcoin is down a little bit.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
This is going to blow your mind. A lot of you guys probably have no idea about this. It's called the max pain factor. All right, so the max pain factor. Now we're also going to go over charts that are moving today. We see some regional banks starting to rally. The bank stocks are getting a bid. Right off the bat, WAL, which is Western Alliance, they came out yesterday and said just in the last few days, they have gotten over 200 million in deposits and over 2 billion basically in the last few weeks. So that is a very big positive. This was one of the banks that was getting crushed just a couple weeks ago. And again, that is a confidence builder for the sector to see money running in. So regional banks, again, are on the upswing today. I happen to be very bullish on them. I have positions in some of them. And again, I do look for further upside in the near term. I'm not a long-term investor in anything really, to be honest. Again, eventually Bitcoin, yes. In gold, yes. But aside from that, I am a swing trader. Everyone understand what swing trading is, right? Swing trading is buying and looking for disparities in price in the near term that can ultimately pay you out in the next week, in the next 2 weeks, in the next month. That again is what I find is my money maker. It's finding these disparities. I can make about 100 times more money than a buy and hold investor. All right. So let's tune into the charts. Let's take a look at what we have on the charts. The spiders today are inching up just a little bit. Not much movement here. Now, one of the things I want to point out is the volume recently has been very light. The markets have been going neutral to higher in general. Basically, we've been in almost the same range for the last month, even despite the debt ceiling talk. And again, let's talk about the debt ceiling here. So we continue to have negotiations. When we look at the S&P daily chart, there's almost no downside movement, right? What this tells us, and again, this is purely analyzing price action, it tells us that the market is not concerned, right? Investors are not concerned. All right, you have more risk being taken, whether it's stocks like NVIDIA, AMD rocketing just in the last couple days. NVIDIA is getting close to the 300 even number. That's actually one of the stocks we're going to look at for max pain. All right, back to the charts we go here, guys. The spiders, again, down, upticking just a little bit. NASDAQ as well is upticking if we bring up the QQQ chart. Now, the Qs, again, I want to show you some levels on the Qs because ultimately my macro analysis is still dead on here. Short term, I have a neutral to upside bias. I want to tell you why. So the neutral to upside bias comes from the price action, especially in the NASDAQ 100. We're almost in float mode. The volume being so light, and I just brought this up a minute ago, when volume is light, it's automatically helping the upside. Think about this. When volume is light, are institutions participating in a major way? The answer is no. All right, institutions are the main ones that will short markets. If you talk to 10 people out on the street, how many of them do you think have ever shorted? In fact, some of them may not even know how to short a stock or a crypto. So ultimately, we know that generally the retail crowd, which has less money, if the markets are floating up on light volume, they're the ones buying. The other thing to remember is that when you have retail investors, we are conditioned by Wall Street, we're conditioned by CNBC, Bloomberg, all these media outlets to be bullish. They're always talking about, the economy recovering. Analysts are coming out upgrading price targets. In fact, if you look at how many stocks have sell ratings out there versus buy ratings, it's literally like 100 to 1. Very rare a stock will ever get a sell rating. Most analysts are automatically bullish. Last thing I'll say on this in terms of light volume and why the markets tend to float up in light volume is because think about this. Inherently as humans, are we positive or negative? And the answer is we're positive. We're positive people. We're a positive society. We think things will get better generally. In fact, if you're too negative, what do? They give you medication to make you positive. Right? So again, think about it like that, is that generally we're always going to think things are going to go up, things are going to increase in price, and that's the way we can make money. Now, I take it from a different angle. I look for these short-term disparities, and I rock it here. I'll buy here, I'll short here, I'll buy here, etc., and do it that way. All right, looking at the QQQ chart again, guys, At 334, that would be a major level of resistance. That is a level that I'm looking at. All right, so again, the Qs are on watch here. Let's look at WAL, Western Alliance Bancorp. Take a look at the chart on this. It is a wacky chart. All right, you had this huge dump here, then a secondary huge dump. The stock, again, is trading near $35, again, up well over 10% or about a little over 10% today. Short-term resistance is not going to be until 41. So again, I personally can't short something like this. It's too beaten down. There's too many shorts in it. It could be a short squeeze candidate. If you're someone who takes more risk than I, the first level of potential shorting would be right around 41.50 to 42. Again, that is ridiculously high risk. I don't take those type of trades. I take high probability trades, both long and short, when the factors align. Next up, let's take a look at gold. I want to look at crypto as well. I have a bunch of crypto trades levels that I'm actually looking to buy at. So again, contrary to popular belief, I am not an all-time bear. Bottom line is, yeah, I'm a trader. So when the charts tell me to be bearish, I'm bearish. When the charts tell me to be bullish, I'm bullish. And ultimately, there are some levels I'm watching on crypto that are actually getting intriguing. Yes, I have a short signal out on Bitcoin. We're in the money on that. Same thing on Ethereum, in the money on that. But there will be levels I cover, and then I flip it to the long side, and then I'll flip it to the short side again. Again, like I said at the beginning, I can make 100 times more money than a buy and hold investor. Gold. I've been saying for this, I talked about this in last week's game plan. Gold is going to come back to this level right here. You're looking around 1925. All right, it kind of double topped. We hit the all-time high level on gold. Then it's rolled over yesterday. My guess is you have a little bit of support around 1970 right down here, right? So again, if we zoom in a little bit, I want to show you this. See all these lows right here? That's going to be support. So again, that'll be a little bit of support. I would call that a minor level of support. And then ultimately, you're looking for a move lower into this level. Once we get to about 1925-ish, give or take, that's where I start accumulating a long position on gold. All right, so I still manage my losses relatively well, but I can give them more leeway because my win rate is 80% or greater. Just the bottom line on that. All right, I'm a super long-term and mid-term bull on gold. Eventually, gold breaks the all-time highs, and probably by year-end, I still have a $2,300 price target. Okay, now, before we get into crypto, I want to show you this max pain analysis. So this is going to blow your mind for some of you guys. So this is getting into options expiration. All right, so options expiration type stuff. So what we see here is that we have a very big move up on NVIDIA. NVIDIA currently pre-market trading just under 96 cents. Now what we know is that max pain is the level where the majority of, or essentially the majority of bulls and of calls and puts in the options market will expire worthless. Now the options game is this. Institutions, and this is gonna, some of you guys may not have heard this before, but it's gonna blow your mind. Institutions sell a majority of options to retail investors. I would say 95 to 98% of all options being sold are done by institutions. The only reason they're doing that is because it's a money maker for them. They're not doing it and taking losses. You know, no institution selling these options and being like, oh, we might lose this month. They win every month, which means they're taking in a premium for that option. And what they're doing is they know that in general, there's a place where that stock or that crypto needs to expire where they maximize profit. They have computers that calculate this, right? So they say, okay, where do we need this stock to expire, or on Friday of options expiration, where does it have to end where we make the maximum amount of money? In other words, where does a majority of the calls and puts expire worthless? That's the goal. And what you'll see on options expiration Friday is stocks get driven to certain levels. Now, for me, the only way I trade that is I want to figure out which stocks are still far away from those levels. Because if they are, there's a chance, and I say a chance because there's no guarantees, but there's a chance that they could drive that stock towards that max point of profit for themselves, essentially where the majority of retail loses their money. Okay, so we know NVIDIA pre-market is trading near $96 per share. All right, now we're going to get into crypto. I know everyone waiting for my crypto analysis, or at least most of you guys are. Some of you guys may not be. All right, what we have here, guys, here's your Bitcoin chart. All right, now I'm going to move this trend line. I want to show you the trend line I'm following here. This is the one I've been talking about now quite a bit. What we do is we just put a trend line right there. What we can clearly see, pivot low right through here, and then it went right through that top. To me, this is a bear flag on Bitcoin. Bear flag on Bitcoin, starting to inch lower. Now notice how bank stocks are up today and Bitcoin is down a little bit. That makes sense. Remember what happened when banks were collapsing. Banks collapsing, Bitcoin went up. So you're seeing the same pattern take place here where they trade inverse. All right, now again, the bear flag to me has me positioning for a target of around 24,800 to 24,000 as a first target range. So I'm still in the camp that this is going lower. I was the only one, or one of the only ones out there. Maybe there was one more person in the universe saying 30,500 would be the resistance and the pullback. That was obviously dead on, folks. Again, you have to be blind not to see that was a dead on call there. Now I'm saying that, again, we are still going to head lower, but the next stopping point is right in the 24 to 25,000 range. Now, like I said, there are levels where I would start to go long. For me, where am I looking to potentially go long? Very simply put, if we bring a trend line right up here, you're looking at around 23,000. 23,000 would be an opportunity for me on the long side. And again, that's where I would start. So yeah, first target's 24 to 25, but ultimately, if we flush enough, I'm going to look to go long for a bounce. Now again, please understand, I'm not a long-term investor yet in Bitcoin. Yeah, I have a tiny hodl position that I bought back in the 17,000 range. We talked about that when it happened. But again, that's only a tiny position. It wasn't what I intended to accumulate. Based on the charts, this is still a bear market rally. Now again, I know your heartstrings, your gut, everything might tell you otherwise because you go on Twitter and you go in social media and you're so influenced by the influencers out there that you just can't hold your horses and you think it's a new bull market. Charts to me are everything. You guys can do that if you want. I'm fine with that. I look at the charts because I've made more money following the charts than really anyone in this day and age, right? I mean, I'm a chart guy. You guys know that. I'm neither emotional, I'm neither bullish nor bearish. It's just a matter of the levels. All right, so again, we know the levels on this. Take a look at Ethereum here. I'm just going to go over a couple crypto charts here. Crypto, look at this. Look at the parallels. I'm a huge fan of parallels. Start drawing your parallels, guys. Check this out. Here you have a bear flag starting to form, beginning to downtick on Ethereum. Where's your next parallel? Down here around 1,600 or just below. To me, that's where it's likely headed. All right, so again, bear flag is bearish. I mean, again, I'm not making this up. Go in any textbook. Look at these stuff. Bear flag is bearish. That's why it has the name. Target for me, you're going to look at around the 1,600 level. There'll be some support around 17 or so, but we kind of already kissed it at this low. So you're now looking at that 16, 15, 80 level.